Hey there, Dave Keller here with Market Misbehavior. Today I'm sharing with you my top 10 charts to watch for November 2024. We'll also take a look at the charts we talked about for October. At the beginning of the month of October, we'll look at how those 10 stocks actually performed, some of the evidence that I think we learned through the course of that month that may have helped us stay with some of the top performers and maybe stay away from some of the bottom performers. Before we get to the 10 charts and also October's charts, as a reminder, these don't represent recommendations. Do not recommend that you do any particular actions with these charts. As always, it's more for educational purposes, and I would encourage you to do your own due diligence. In fact, some of the top 10 charts that we talk about for November, some of them may represent some actionable opportunities if the charts evolve, as we might expect. Some of them are less for individual trading and more to think about as indicative charts representing overall market sentiment. I think there's a lot to be learned by looking at individual stocks and how they evolved and using that to make inferences about overall market sentiment. Before we get to my top 10 charts for November, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions. And when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, now before we talk about the top 10 charts for November, what happened to the 10 charts we talked about a month ago, right? End of September, beginning of October, we talked about the top 10 charts for October 2024. Let's take a look and see how that basket of stocks actually done. Now, of course, when we talk about these names, it's just sort of looking at some key charts, key stocks that I think are worth following, not necessarily that they're a good actionable opportunity. And you have to remember that we missed the opportunity to use any sort of risk management, right? So some names that are down a bit, if I was taking a position, I would have been stopped out well before today. But let's look through the charts just to talk about what they did, what sort of lessons we can learn from them. Baidu down the most, down about 18+%. And looking at the chart of Baidu again today, I would say, it's a great cautionary tale. We talked about that chart kind of back here as it was just breaking above the 200-day and just breaking above the July peak. It ended up lasting a couple more days, but from there, we kind of stalled out. We ended up finding resistance around the early 2024 highs, right around 115, and then we started to break down. And so that's a good reminder that if you do follow breakouts, make sure you have something in your toolkit to minimize this sort of drawdown so that you're not riding a chart, down even further. Densply, I'm not even sure how to pronounce that one. X-Ray, we'll call it, the ticker, was another one we talked about. We talked about it right here, and this was one that we particularly talked about. This is a bullish chart if and when it can break above that July peak, and that was the formation we were sort of detecting, was that we were testing resistance. But as we discussed in that video, it's not about trading to resistance, it's trading through resistance, right? We're looking for stocks that are actually breaking out above key resistance levels. It never happened, right? So I think a lot of times we like to jump into things before the chart really deserves it, but we're just using hope as an investment strategy, right? Hopium is not a good reason why to buy anything. And so, arguably the entry point never really came. The same time, some of these stocks actually worked quite well, right? Charts like Spotify and others have continued to remain in primary uptrends, and it's a great reminder to me. I like to talk about charts like Spotify as innocent until proven guilty, right? Let's continue watching this chart go higher. Let's follow the trend upwards until the chart tells us to no longer follow it. For now, I would say Spotify and some of these other names continuing to move to the upside just fine. So let's now look forward and talk about top 10 charts to watch for November 2024. And as always, these are not recommendations. I'm not suggesting you take any specific price action. Please do your own due diligence, do your own analytical process, and so forth. But let's talk about top 10 charts to watch and why. We're going to start with 2 charts from the October list that I'm feeling comfortable carrying over to the November list. One of those would be AT&T. I think AT&T, as we talked about at the end of September, combines 2 powerful benefits here in November of 2024. Number 1, a decent dividend yield. This is a stock with a 5% dividend yield, meaning when you buy the stock right now over the course of 12 months, your projections are that you would get about 5% of that back in the form of a dividend. Now, the reality is when a stock pays a dividend, that dividend payment is actually deducted from the stock price. So you'll see, gaps on the chart if you're looking at an unadjusted price chart. But the reality is AT&T has actually been appreciating on an absolute basis as well. So it's actually been outperforming in terms of its price action, and it has the added benefit of a decent dividend component. So you're making more than you would from like a 10-year treasury bond, but you also have the price appreciation. So AT&T is a pretty decent, has been a pretty decent bet in 2024, has consistently outperformed in the last 6 months. And I would argue still kind of setting up. If there's anything that cautions me or that causes me to be sort of hesitant with the chart like AT&T, it's the bearish momentum divergence. If you look at the highs September into October, you can see that the RSI is sloping downwards and the price is going up on weaker momentum. That tells me to be a little cautious and just look for signs of a breakdown. For now, though, I would say the chart's still holding up just fine. So chart number 1, AT&T. Chart number 2, again, one of the other holdovers from our October list would be Comcast. Now, Comcast has had a noisy week. Most stocks, I feel like, have had a noisy week. Comcast actually reported earnings on Thursday, gapped higher, and so the stock opened above 45, but by Thursday's close, it was down around 43.50. Friday's session actually ended up right around the same point. It was down slightly from Thursday's close. So we did get an upside gap on earnings, but as the broader equity markets were sort of in a risk-off mode with the heavy nature of some of the Magnificent Seven stocks, those leading growth names, a number of which had disappointing earnings this week, Comcast and others sort of got held down a bit, I think, by the weakness in some of those other areas of the market. However, I would argue that broader trend of recovery continues to hold, right? So Comcast sort of continuing this rounded bottoming pattern, finding support in the mid-30s before rotating back above the 200-day, back above the 50-day, and now we're above moving average support. Overhead, we're getting closer and closer to the ultimate resistance level for Comcast, which is right around $47 a share. I think this is a really interesting weekly chart if and when it can power above that 47 level. So this is the type of chart, certainly in a primary uptrend over the last 6 weeks, or 6 months, that is. I like that price action. I like the behavior. I like the gap higher this week on earnings. The question would be, and this will be a consistent theme with some of the other charts we're going to look at, is it able to hold that breakout level after earnings? And if so, I think the real test for Comcast is going to be 47. In terms of a long-term play, getting above 47, I think, would be a significant sign of follow-through, indicating that this may just the beginning of a broader advance. So the weekly chart of Comcast really speaks to the strength and the importance of that 47 level. All right, chart number 3, Stifel. Stifel Financial is one of the financial stocks. It's in the capital markets group, or the subgroup on stock charts called investment services. And if you look at the chart of Stifel, I would say from a trend perspective, the trend is strong. What I mean is higher highs, higher lows, right? The stock has been performing quite well in 2024. The relative strength is quite strong, right? The bottom panel showing the relative performance. It's outperformed the S&P, especially in the last couple months, but over the course of 2024 for sure. And I would also say the momentum is quite constructive, right? The RSI, note how the RSI on pullbacks usually remains right at or just below 40. And so that's the sign of a stock in a primary uptrend. As the entire range of the momentum indicators kind of push up a little bit, the RSI kind of remains in the upper end of the range, which speaks to the fact that the general trend is positive. Is this the right moment necessarily to consider Stifel? Maybe not. And I would say the fact that it's been overbought for most of October, and then just here this week came out of that overbought region, usually indicates that we're a little overextended and we're probably pulling back a little bit. What's great about this kind of setup, look at the number of pullbacks that we had to an ascending 50-day moving average through the course of 2024. We may be setting up for another one of those pullbacks, which means I'm immediately looking down to those levels and looking for opportunities to accumulate. If this is the type of stock that I want to ride higher, maybe this isn't the moment and you wait for an actionable pullback to sort of layer into a position. So I think the long-term chart of Stifel, quite strong. The weekly chart really speaks to the strength in this particular bank, but also, others in the financial sector. I think the financial sector is full of charts kind of like SF that have that long-term strength. A number of them, I think, similar conditions, a bit overbought recently, and now coming out of that overbought region. Example of what that might look like, sort of that February, early March 2024, right? We're sort of overextended, we're overbought. We come out of the overbought region, we pull back a little bit, but ends up setting the stage for the next advance. That's what I would, look for with the chart of Stifel through the month of November in an ideal situation. Chart number 4, Texas Roadhouse. This is an example of a breakout candidate that now has clear support below current levels. Similar to what we saw with SF, it's a little overbought this week, and as of Thursday into Friday, we did come out of that overbought region, and it's pulling back a little bit going into the weekend. Going into next week, you want to see if it can get a foothold, right? I mean, and an uptrend is defined by higher highs, which we've gotten, and now higher lows. So the question is, when we pull back, do we remain above that swing low from mid-October, which is around 178? 175 would be the 50-day moving average and also this pivot point. A pivot point is a level of resistance which now becomes support. So look how the stock hit a ceiling around 175. We finally broke above it, and then that ceiling becomes a floor, and that becomes new support. So 175 to 178 is the 50-day moving average, that pivot point, and the swing low from October. So, think about the potential upside with the potential downside to that level. This is the kind of chart, in my opinion, that provides what's called a natural stop, where there's a clear level of support where if we can hold that, I think that's still a constructive chart. But overall, again, the long-term story I think is quite strong. I like the fact that we've had these runs and then consolidations. We've most recently come out of a big consolidation phase from May through September. That breakout appears to be a good one. And now the question is, do we hold those levels of support and continue this upward trajectory? That's what I'd be looking for in the month of November. Chart number 5 out of 10, Parker Hannifin, is kind of like an example of what some of those previous charts could look like. A couple of these I've talked about pulling back to an ascending 50-day moving average. Now that can be kind of a constructive entry point on a longer-term position. PH might actually be demonstrating that pattern here over the last week or two. PH is an industrial machinery name. As you think about your portfolio, I don't know what you've done, but many of us, I would argue, probably sitting on a lot of gains in the technology and communication spaces. A lot of those leading growth names have had incredible runs in 2024, have probably become bigger and bigger parts of our portfolio. And the problem is, if you leave those as such big weights, right, as the prices go up and as it outperforms, it swells to becoming a bigger and bigger percentage of your portfolio. And that's good as long as it keeps going up. But if they stop going up, as a lot of those leading growth names have, all of a sudden your biggest bets become your biggest downfalls. They drag your performance. So if we can lighten up on those positions that have done so well, just make sure we still have a meaningful position, but make it less of a huge overweight, and then allocate into some of these emerging ideas in areas like financials and industrials and maybe defensive areas like utilities. That's how we can sort of better position ourselves for what may be coming next here in November and December. So PH, I like the setup. I like this breakout from back in earlier in the year, right? The April and May and July peaks all around 560. We finally broke above there on this nice gap out of the August low when we tested the 200-day moving average. The resistance becomes support. That's the concept of polarity that we talked about on the previous chart. We then continued that breakout higher, and then just in the month of October, really in the last couple of weeks, we've pulled back to an ascending 50-day moving average. I like that setup. I think this represents maybe more of an actionable point, showing a short-term pullback within a long-term uptrend. It's something we would call a fat pitch chart. So I like that setup. Would love to see if that uptrend can continue into November. Fastenal, ticker FAST, another stock in the industrial sector, kind of continuing this theme of maybe reallocating out of growth areas and into other areas of the market. These are more value sectors like industrials and financials. FAST has round-tripped from a level of around 78 back here in March. It got all the way down to the low 60s at its bottom in July, and then rotated back higher. And look how the lower lows become higher lows as we're now re-emerging. The big gap higher on earnings earlier in the month of October really propelled the stock back to the upside. And now we have a beautiful higher low right around 75. So if I am taking a position here today, which I do not have a position in any of these 10 names, full disclosure, but if I did, I would probably use 75 as what's called a natural stop. When I talk about a chart and say a natural stop, that just means the chart gives you sort of a natural, really obvious point where I think you can limit the downside, right? A level where you'd put an initial stop order, where at least you'd set an alert and agree to revisit the position. And as long as we remain above that, probably the chart is doing okay. What's interesting about the setup here today, though, and I would say going into November, is this cup and handle pattern, right? So you have this broad bottoming pattern here, about a 6-month bottoming pattern, and then this shallower pullback, and we're just breaking above the rim of that cup here this week. I think going into November, do we power above that resistance level, complete that cup and handle pattern? And if so, that could indicate much further upside on a stock that's really starting to outperform going into November. Chart number 7, Home Depot. A similar theme to a lot of the other charts, right? This concept of polarity, resistance becoming support. Here we have another stock in September. It broke above the March high. I've indicated those with a green dashed horizontal line. We broke above the September peak, got up to around 420 on an adjusted basis, then pulled back to the breakout level around 390. Now we are back to that pivot point, which is also pretty much exactly where the 50-day moving average is, and that's where we spent most of the time this last week. If that 50-day can hold, if that pivot point around 390 can hold, this could be a beautiful higher low on the way to the next move higher. So you have a strong stock, a breakout name pulling back to an ascending 50-day moving average, an established support level, the RSI hitting right around 40, which is where you often have pullbacks stalling out in a bullish phase. I kind of like the setup, sort of a more actionable entry point. And the question is, do we find that support and start to rotate higher for the chart of Home Depot? AMD and the next two charts really, I think, the next two charts are more, broad, sort of mega cap growth stocks that I think have had a frustrating end to October. And while I don't necessarily see them as potential long ideas going into November, I certainly would argue these are important charts to watch. And here's why. AMD is number 8. AMD, of course, gapped lower on Wednesday of this week on a disappointing earnings report. It was down about 10% on Wednesday's session. And what's interesting is what happened right before there. On Tuesday's session, we finally closed back above the 200-day moving average. And that simple analysis of is the stock above or below the 200-day, I think means something. So we finally closed through the 200-day moving average. And instead of additional buyers coming in and pushing us back to retest the July high, the opposite happened. It got dinged and actually gapped lower on Wednesday around earnings. But even more meaningful, it's what happened afterwards. So when the stock gapped down from around 166, we'll call it, to open around 153, did you see a bunch of buyers coming in saying, sweet, I missed the stock here. I'm able to buy it back at the swing low from late October. This is a bargain, good company at a discount. I'm going to buy a bunch of positions. No, the opposite happened. You actually saw additional sellers coming in or a lack of buyers, but the price actually continued lower. So you gapped down, but then instead of recovering, we actually sold off even further with lower closes on Thursday and Friday. I think that speaks to a lack of conviction and a lack of bullish sentiment, lack of buyers, right? A lack of willing buyers, willing to buy into this. I see additional profit taking, additional unwinding of long positions as we observed. We're looking down now to previous support levels from August and September, but overall, I would say the failed breakout and the gap lower this week means it's an important space, semiconductors, an important start to watch to see if it's able to find some sort of stability, because if not, it's hard to imagine the Nasdaq 100 doing well if big names like AMD are struggling. Similar theme, chart number 9 is Alphabet. This is one that actually completed an inverted head and shoulders pattern over the last week in late October. An inverted head and shoulders pattern is where you have a downtrend, you have a low surrounded by higher lows, and you might call this like a complex inverted head and shoulders pattern. I'm less concerned about the the verbiage, but more concerned with the fact that this resistance level from August, September, and October was finally broken above on Tuesday. Wednesday, we gapped higher on Alphabet's earnings. We opened around 181, but similar to AMD, you had a bunch of selling. So instead of people thrilled to own Alphabet, and even at this elevated level, you actually saw people selling that breakout, and we ended up closing toward the lows of the day. Thursday and Friday continuing to sort of remain above the breakout level, but off of the gap higher. So I think vital chart to watch because it's a huge weight in the Nasdaq, huge weight in the S&P, huge weight in the XLC. It's one of the two biggest holdings there, along with Meta. So the question is it able to hold this breakout level? That horizontal line around 168, I think, is an important one to watch. If charts like Alphabet can hold that level, I would say the downside potential for the Nasdaq and the S&P probably limited because the big dogs are holding in there. But if Alphabet is breaking down below that pivot point, how optimistic do I want to be on the broader markets if investors aren't willing to buy, some of the better companies out there that have been the example AI charts? If they're struggling, I'm going to be struggling as well. All right, finish off on a chart with potential upside. Celestica, CLS. Shout out to my friends at IBD. I was on IBD Live here on Friday, November 1st. A lot of fun catching up with Justin, Mike, David, and the team at IBD. They're fantastic human beings, really, really nice and thoughtful analysts, and really know the markets well. But we had a great conversation about a lot of tickers and a lot of market wisdom, I hope, through the course of our discussion. But one of the names that came out of that discussion was CLS. I think one of the viewers asked about this, and I really like the setup here. This found resistance in May, June, and July, and indeed even October, right around 60 to 62. I've highlighted that with this blue shaded area. And after a couple bounces off of the 200-day moving average and a pullback, we finally gapped higher on earnings about a week and a half ago. From there, we have what I would argue is called a gap and run pattern. This is where a stock gaps higher. Think about the chart of Alphabet where we gapped up but then traded lower. This is the opposite. We gapped up but then trade higher. So it shows you we gapped to new 52-week highs, and additional buyers are coming in willing to pay more and more. That suggests more long-term optimism. That suggests optimism for the chart. And that means I probably want to assume that trend is a bullish one until proven otherwise. There you go. There are the top 10 charts to follow here in November 2024. To regroup, we've got 3 in the communication services sector. AT&T, a long-term story, doing quite well. Comcast, ticker CMCSA. The question is, does it finally break out above that key resistance level? Alphabet in that same sector, I would say the question is, do we recover after the pullback that we had after earnings this week? Within consumer discretionary, Texas Roadhouse with a breakout, clear support level to watch. Home Depot pulling back to support. Does it hold that 50-day moving average? I wouldn't be surprised if it does. In the financial and industrial sector, 3 stocks to talk about. Stifel, SF, a good one to look for a pullback out of an overbought condition. Parker Hannifin, PH, arguably already making that sort of tactical pullback. And Fastenal, FAST, completing a potential cup and handle pattern. Finally, within the technology sector, AMD, a semiconductor stock with a failed breakout. Instead of breaking out on earnings, it actually is breaking down, gapping lower, and then continuing Thursday and Friday in a position of weakness. Finally, technology name CLS with the gap and run pattern. The gap higher and then additional move to the upside, usually a pretty bullish development. What do you think of these 10 stocks? Which of the ones do you think has the best opportunity in November? Is there anyone that I missed that you would have included in your top 10? Make sure you drop a comment below and let me know. And if you like this thinking about technical analysis, best stock ideas, about thinking about entry and exit points, all with a behavioral lens, focusing on how and why we make decisions certain ways, our premium memberships may be a great opportunity. If you want to do this sort of thing and have mentorship from someone like me, virtual courses to learn the tools that I'm using and how I'm applying them to manage portfolios and identify ideas and manage risk, go to marketmisbehavior.com/premium or scan the QR code that you see on your screen. Make sure you use the code YouTube when you check out for 20% off your first 12 months on any plan. For Market Misbehavior, I'm Dave Keller. Have a great one. We'll talk to you again soon. And remember, it's always a good time to own good charts.